Hello and welcome. Thank you for joining us on Business Incorporated on Channels Television. I'm Chimezi Obi Iwago. On the show today, South Africa allocates extra $4.2 billion for cash-strapped Eskom. Zimbabwe increases fuel prices again, but pumps remain dry. Plus, Kenyan Finance Minister Henry Rotich arrested for corruption. Let's get the show started with the markets. And intraday figures from the major markets in Africa were mostly positive, with Nigeria's all-share index up some 0.03% as at midday. It's a different story in South Africa, where the JSE index was down 0.52% at intraday. The EGX 30 was almost up 1% as at intraday, while the Kenyan bourse closed Friday's session 0.38% in positive territory. And in the Middle East, most of the numbers were in the green at intraday. Abu Dhabi stock market looks set for a fifth straight positive session led by its biggest lender after strong second quarter results, while real estate shares buoyed Dubai's bourse. Abu Dhabi's index was up 1.22% as at intraday, while in Dubai the index was up 1.30%. Qatar's index was also 0.39% up as at midday Nigerian time. Saudi Arabia's index was flat, however, with losses in the petrochemical sector outweighing gains for lenders. And in Europe, stocks were mixed in the morning amid waning expectations of an aggressive interest rate cut by the Federal Reserve. While issues of earnings and political tension also rocked the market. Well, Chelsea Dolany joins us now from the Frankfurt Stock Exchange to give us more details. Hello, Chelsea. Beautiful afternoon to you, and of course, beautiful week.
Thank you. You too.
Right. Now, the UK will announce a new Conservative Party leader on Tuesday to replace outgoing Prime Minister Theresa May. UK's Foreign Minister Duncan has just resigned before the presumed new Prime Minister takes office. Now, this comes as the Finance Minister Hammond is also set to resign on Wednesday if Boris Johnson becomes the next Prime Minister. What is the European markets making of this latest Brexit development?
So we've seen a small decline in the pound today. It's down about 0.3%, so not a huge decline. But you sort of have to remember just how dramatic this has been for European markets over the past really 3 years. So the pound is now trading near its lowest level in 2 years, and a lot of analysts are saying there's more to come for the pound. So if you'll remember, Boris Johnson was one of the really an instrumental voice in getting the UK to decide to leave the European Union, and he's been a very vocal opponent of this government in the UK as it's tried to negotiate for the Brexit deal. So there's definitely a lot more to come as we head towards the October 31st deadline, at which the UK is expected to make a decision. So Boris Johnson is saying they're going to be leaving the European Union no matter what. He says we're going to try and make a deal, but if we don't, we're still leaving. So I think for the market, there's still a little bit of time ahead. So I think if the bigger declines in the pound are probably going to come a little bit closer to October 31st, and there's a lot of infighting right now within the UK government. You mentioned some of these resignations, and I think a lot of the UK politicians are trying to figure out if there is a way to prevent sort of the hard Brexit that Boris Johnson is saying is possible. So I think for investors, they're not going to be fully pricing in a no-deal Brexit at this point. They're going to wait a little while and see sort of what Parliament is able to do and how these negotiations are going. But if you think about it, Theresa May had 3 years to try and negotiate this Brexit deal. Boris Johnson is saying he can do it in 3 months, which a lot of investors are saying is just not possible. So I think there will be, a larger reckoning about what this means for the UK economy in the months ahead.
All right, Chelsea, well, it's the season of earnings. How is the European half-year earnings coming up? Are there front runners in terms of the numbers?
We've only had a few reports so far. Earnings season technically kicked off last week, and this week we'll have really a lot of big names coming. So we have Daimler, we have Bayer, BASF, a couple big names in France and the UK. But what people are really going to be paying attention to is some of these big German names. And that's in part just because a lot of companies here have already come out in the past few weeks and issued these kind of concerning warnings about how their second or their first half results are going to stack up. So we had Daimler recently come out and say its earnings were going to come in below expectations. BASF also issued a pretty stark warning about its results for this period. So I think, there's been this narrative in the market that earnings are slowing, the economy is slowing, and that, all these tensions we have between China, between the U.S., all of the tariffs, and, all of this global uncertainty is starting to really impact results. So I think it's going to be really important for investors to be watching just to see how these results are stacking up. And one company that we did see report last week was SAP, which is a German software company, and that they reported results that were really pretty far below what analysts had expected, and so we did see a sell-off on that. But I think there is a lot of concern going into this earnings season about how companies are faring as the economy slows, and so it'll be important to be watching for those, especially as we come into Thursday's European Central Bank meeting, where they'll also be making some statements about their expectations for easing coming forward, and that's also supposed to sort of give an indication of how the European economy is faring.
All right, thank you, Chelsea. We'll leave it at that. Let's continue to monitor those developments, and of course, the week has just started, so we have quite a lot to chew in the course of the week. Thank you for your time.